I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like this service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon and welcome to GrainTV. It's December 30th, 2013. To my right is Cody Bills and I'm Brock Shimbano. We had a negative day for the grain complex in Chicago. Let's turn to live quotes to see how we ended. Corn was down 4 cents. March soybeans off 5 cents. Wheat in Chicago down 8.5 cents, and Kansas City was off 8.5 cents as well. You know, Cody, it seems like coming out of the weekend and through the overnight session, a lot of what was driving the trade was weather in South America.
Yeah, absolutely. You know, we talked about this a little bit last week. We knew that there was going to be a rain event that was coming through from Friday and into the early part of this week. That rain event has happened. We have seen between 1/2 inch to 1.5 inches of rain throughout much of the growing regions in Argentina. And Argentina really was the area that was of most concern. And so I think when we see those sort of rains, the market starts to sell a little bit. But the thing to keep in mind is that after these rain events, it's likely we're going to have a return to dryness by the end of the week. And I wouldn't be surprised if that helps support us later on in the week.
Yeah, you know, we were off pretty sharply here today, and I think something that continued to drive us a little bit lower was the export inspections. You know, we missed on all three commodities today. We saw wheat, corn, and soybeans all miss expectations. We came in a little bit below expectations. You know, for wheat, we came in at about 13 million bushels exported, corn about 24 million bushels, and soybeans about 43 million bushels exported. But if we take a look at where we stand for this marketing year, if you take a look at the soybean chart here, you can see that for better part of the last about 8 weeks or so, we have been beating the seasonal pace to meet current USDA projections. On the year, we're running about 181 million bushels ahead of that pace. So we're very strong on the exports for soybeans. You know, wheat, we've had a pretty similar story, although we have slowed down over the last couple of months or so. For wheat, we're still running about 116 million bushels ahead of pace to meet the current USDA projections. So even though this week was a little bit disappointing, allowed a little bit of selling to go on today, overall for the year, you know, corn, wheat, and soybeans are all beating the seasonal pace to meet USDA projections. So very good on the export inspections throughout this marketing year.
Yeah, absolutely. You know, Brock, one of the things that we continue to watch here is wheat continue to drift lower, and I guess a lot of people are calling in and asking our perspective on this. Will wheat continue to trade off here? And you know, really when I look at this, you know, we went from in October to November, we traded around 720, moved down to around that 650 level. By that time, we bounced a little bit. We had a little bit of a consolidation, a little bit of a bounce. Then we took another leg lower. The way I look at this, you know, this is the second leg of a big move. We've moved about as far as we have during that first leg when you measure it out. Over this roughly the same period of time. I think $6 is going to be a critical area. I wouldn't be surprised if it has a strong support down there around $6. I wouldn't be surprised if we break through $6 here, at least during the middle of the day. Maybe we close down there for a day, but I think by the end of the week, it's likely that we are able to close above $6. I think there's going to be support down here. I wouldn't be surprised if we see some people take some positions off and lock in some of the potential gains that they have down around this $6. There's trend line support down here. There's a number of support levels, and I would just be nervous if you're looking to short this thing down this far. Not to say that when you look at the overall trend, I think the overall trend is very clear. We have a lot of stocks, and I would continue to expect a bear market. But I think at this point in the game, there's more of a chance for a quick rebound than there is for continued rapid selling in the wheat market.
You know, the RSI indicator is suggesting that this market's severely oversold. You know, over the last couple of trade sessions, we have tested that $6 level. It's held up pretty well. You know, especially today's action, we did close right near that $6 level as a new contract low close for the Chicago wheat contract. So that's going to definitely be a critical area to continue to watch. But the thing that kind of sticks in the back of my mind is, yeah, we've tested that a couple times in the last few sessions, but it's been on very light volume. Very few traders in the market right now. It's going to be interesting to see how this market pans out after the first of the year. We get back to more normal trade volume.
That sounds fair enough, guys. Thanks a lot for tuning in. Remember that on Tuesday we're going to have a regular close in the grain markets. Wednesday we're going to have that day off. It's going to be closed for the New Year's holiday, and then we're going to resume trade at 8:30 Central Standard Time on Thursday. So if you have any questions about what we talked about today or the schedule, give us a call at 877-472-4607. And remember, if you're interested in trading mobile wheat, go ahead and take a demo at grainhedge.com. Thanks a lot for tuning in. We'll see you here tomorrow.